Okay, guys, let's get started. I'm going to break down US30 uh, for this week price action and to see if there is any trading opportunity or trading setups are there. One of the most important things in the trading is that you would like to see if there is a good trading opportunity. Despite of your analysis, your top bottom price action reading, your strategies that you use for the purposes of entries, the most important factor that straight away tells you there is an opportunity for you or it's a good investment is if the price is at a significant level or if the price is near the significant level. This is the question. I have classified that as an area of interest. So I will be using that terminology a lot. Uh, Previously, we've been focusing on this recently because of this breakdown analysis, top bottom breakdown analysis, breakdown of execution from M30, M5, M15, or M1 timeframes. We've been too engaged that I've seen that most of you have not been focusing on this enough. Therefore, I've again started reminding you guys on this, and it's a very important factor. Remember something, it's your analysis and your trading plan, which is nearly 80%. Execution, you can use any strategies as far as execution is concerned, which could be a strategy based on H1 candlestick patterns, which can be a strategy on M30 variation, which can be a strategy on M5 variation, M15 variation. It can be a strategy on M15 candlestick analysis and variation. So you've got various strategies. A pullback to 50 EMA with a candlestick formation. There's another strategy. So as far as to enter the trades, there are many strategies. All strategies are right. Every strategy has its own advantages and disadvantages. But what it matters is that you stick to your strategy, which of course we'll be discussing in the next session. In this session, what's important is you understand your analysis, you understand your trading plan, and your trading plan can be of 30 pips. But then once you devise a trading plan, all you have to do is to execute the trading plan if the opportunity is presented, for how long the opportunity is presented on your executional timeframes, which begins from M30, M15, M5, or M1 timeframes. So let's get started on this. Yeah. US30. We've been trading this pair very successfully, as you can see from previous few weeks. Price is nearly forming a triple top formation. I will be conducting a top bottom analysis, and I expect you guys to follow these analyses and to practice these analyses by yourself exactly as the steps I've taken. It will boost your confidence. Now, the first step will always be marking your levels, which I'm going to skip here. If you would like to see how to mark the levels, of course, there's a video on the YouTube channel that you can watch where I've marked monthly, weekly, and daily point of reactions. But I will begin from analysis, a top-bottom analysis, initiating your initial trading plan, which is analysis of begin from the weekly time frame, and then you break it down onto a daily time frame. And I will show you a slight breakdown onto H4. Remember, as a trader, your task is, as far as the planning is concerned, break down from weekly to daily to H4. And when it comes to execution, it's H1, M30, M15, M5, and M1. So reality is you are literally breaking down the price action of the weekly charts onto a time frame where you seek your execution, which could pretty much be on M5 or M15, even M1 time frame, depends on the trading plan. So you've got triple top formation. That is a significant area, an important one. Now, price has been sharply rising, as you can see. You've got 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of sharp movement, a clear buying opportunity. Then you had a pullback, which had given you the variation. So weekly analysis, as I said, observe the market structure, observe the variations. Market structure is bullish. Price is in the bullish trend. Price action is extremely bullish. So seeing this price action, our anticipation is based off the weekly that we will be expecting the price to go higher further. But yes, it's a weekly analysis. We can expect the price to stay in this range, which she has been from last few months. Now, moving averages acting as resistance. So the price action is extremely bullish actually on this. What we're expecting is either price will take out these levels or price will seek retracement. So your task is to establish where the variation is. Controlling factor is this candlestick. Follow these steps, please, and so that you can fully understand the breakdown. And this is the real battle. If you get this right, you shouldn't have any problem as far as trading the price action with confidence. Now, engulfing candlestick, you've got this doji formation, price retraces, still this engulfing candlestick controlling, price finding continuous support at this moving average. So right now, today we saw a bullish price action, but you're pretty close to this significant triple top formation. So because you are near the resistance, the next main move, which I will be expecting, is that the price can go higher. The price have the margin to travel, but then if the price rejects there, then I'm expecting the price to retrace. That's what our expectation is. Now, because you're not going to start buying around these levels. Buying on these levels is wrong, even if the price goes higher. Let's say the price has to go higher further. Then we want the price to clear this triple top area, which she had failed repeatedly, retest this level, then we start buying for further upside. So that you shouldn't be fake out. So therefore, retest is important, and it has to be at least based off the weekly time frame. I'll suggest a weekly retest. If it's a daily time frame, you need a daily retest, guys. Here, for this week, what I'm expecting is price can push higher, which she had started earlier since last night. And then if the sellers enter, then this could be your trading opportunity. Immediate trading opportunity for this week at least. Now, let's break down this further. On the daily charts, now we're going to shape up the daily charts, guys. We will be using our supply demand levels, which I've asked you recently to start using them. They are very, they help you to focus on the levels, and those levels, what I'm going to classify these levels as an area of interest. Your default position is that you should always be taking trades from those levels. Now, let's focus on this, and please understand, I'm on the daily. I've finished weekly analysis, variational analysis, price action analysis, market structure analysis on the daily charts. And here, I'm going to mark the significant, again, point of reaction levels. Area of interest. So price is this important area, guys. If the price rejects there and the sellers enter into the market as they have entered there, then I will be expecting a pullback. That's my initial vague trading plan is. Of course, we need to break it down further, but you have to devise your trading plan, and your trading plan will always be determined from up to the daily charts. H4, H1, M30, M15, all are breakdown. The noise on those charts would never be your time frames to factor the trading plan. Now, if the price breaks this, for instance, then what is the next area of interest? Take your time on this. This is where you will be finding your trades. This is exactly where you'll be. And this is one of the reasons the analysis has been pretty precise, because we are focusing on these areas of interest, which normally you've always been marking, but sometimes you don't focus on them. Now, next area of interest is there, guys. If the price leaves this and makes this area as a support level, then I'm expecting the price to aim for this area of interest, which is again an important triple top formation. We have to wait and see if the sellers enter. You get a trading opportunity on this. How risky this buying trade is, you shouldn't have any problem based on the rules that I've devised. All you have to do is to follow the rules, and as long as it remains valid, the bullish trend, you could just keep on buying on higher low formations. So let's focus on this. Now, if the price rejects in this area, then what is our target? What is our target to the downside, which is the next area of interest downside? Let's have a look. This is the next area of interest, which is also a weekly variation level. So you can expect the price. If the price rejects, these are the targets of the price. You can see previously price has rejected, came all the way, found support, went up, found resistance, came back, find support, again went up. So had you been trading from areas of interest, you would be extremely profitable last few weeks, and that's exactly what I am been trading on this pair. Now, all you have to do is to conduct a breakdown of this to seek a confirmation when the price turns bearish on this, when the sellers have entered the market before you take advantage. So which I will be breaking down onto H4 precisely. Now, let's see if there's any significant trend lines which you can mark as a confluence. This trend line here, normally this trend line is important. You can use this trend line as an important factor. So if the sellers enter, you should not be looking to sell straight away. You want the price to come back in this trend line, retest there, and then take a sell trade. That is a more safer trade. Now, this trend line is not your primary resistance level. Primary resistance level will always be that area of interest. This trend line is only an add-on factor, which is a second reason for you, if the price rejects, give you confidence that it could be a good selling opportunity. Now, once you have done this, I want you guys to start using weekly pivots when you're conducting analysis on the daily charts. Again, they will act as strong confluence. It will give you the confidence. Rules remains pretty much the same as you've been trading daily pivots. Again, they are add-on. They will never precedent the price action. So let's apply them and try and understand. So as you can see, the price is breaking this resistance level price. So it's important to see how the price rejects within this. So this is your zone. You can expand this zone slightly. Now this is your zone. You're watching this as an area of interest. If the sellers enter, you can expect the price to go down. So use this as a confluence, as an add-on factor. It will give you a lot of confidence in your analysis. Again, pivots should never be your primary tool of analysis. The primary tool of analysis should always be your price action. Take them off. Let's break it down on H4. Bullish price action, as you can see, the price is going higher. We cannot see what you're expecting is price is going higher. What are you looking for is break of market structure, high formation. On that low high formation is your selling. And this is where the sell setup triggers, and then you will be breaking it down further to the smaller time frames, repeating the very same process to seek an entry on this. Now, you cannot see the variation here. We cannot see the variation. So let me give you an example. Previously, price was rising nicely, still bullish, price was rising. Then you had a break of market structure. You got a break of market structure. Price came back. That's your low high formation. A great trading was a great trading opportunity. The price had retraced to 78.6, and this is your low high formation. This is where your trading plan triggers. When it triggers, of course, then you can break it down further to take execution on a smaller time frames. Now, here you cannot see that variation forms yet. If it hasn't formed yet, which it has to a certain extent, but not so clear, so I would be seeking more clarity based off an H1 to establish this. So went on to H1. Price is in the nice bullish trend. So what you're waiting for is price to break first. Low high formation is your first selling opportunity. Now, if you're getting into the selling opportunities before this, you're literally gambling. You might win, but that's not what you're after, especially if you're practicing, if you are in early stages of your trading. Your objective is not to make pips. Your objective is to master the process, and master the process means entering the trade, exiting the trade. More importantly, waiting for your trading setups is the most significantly important practice that one needs, and you can't do that practice on stimulator. You cannot do that practice on paper trading. That only practice you could literally do is pretty much on demo and live accounts. So therefore I suggest when you're on a live accounts, keep your volumes low and practice, focus on the process in the early stages. Pips are collateral. Pips will automatically follow in the process. So once you've marked this, we go back to H4. Because remember, our principal market structure when it comes to the planning is H4. It's not H1. It's not M30. It's not M15. Once the price breaks this with a candlestick, this is where your execution begins. The process begins. All you need is to be on executional time frames, because break of this is an engulfing candlestick, or a candle which breaches this level, is an AB, a break of structure. You've got a break of structure. That's your A, that's your B, and your entry is on the C to D. That's what you're after. Again, you'll wait for A and B. So when C is formed, a low high formation, another entry to the downside. So your entries are there, your entries are there. So this whole process of price breaking this, forming A, B, and then B to C, the key is that you need to have patience. You need to know exactly what's going on, how the price is developing, and this is why I would strongly suggest watch my lecture on H4 timeframes relationship with M30 and H1, which is extremely important lecture. If you understand that relationship, you would know exactly what is developing on a smaller time frames whilst you are sitting on H4. So this is the breakdown where we are. Well, the trading plan is that as long the price remains within this area of interest, our interest is to sell. That's what our interest is. Again, the price action has been pretty bullish, so I would not classify this as range bound market. That's what I would classify based off the daily charts. So I would be expecting the price to carry on playing this range. This is a range in a bullish market. So understand this completely. It is a range in a bullish market. So you might not be surprised if the price forms a higher low formation there. If it retraces, goes. Because if you focus on this, this is a higher low, then previous low, and then previous low. So the reality is price has been making higher low formations. So what I'm interested in, the first trading opportunity for this week is in the sell zone to sell this pair if the opportunity is presented. Last week, we took a buy trade from this area of interest. Nice hammer formations. We had a clear buying opportunity around these levels, and then you could have managed your trade all the way to the upside. I hope you enjoy this analysis, and I'll send you the link for the next session shortly. Thank you.